Good morning, everyone. This is Doug Campbell with Right Way Options and your morning market preparation video for September 14th, 2017. Holy moly, those bulls are strong. The sheer momentum of this move just continues to bring in a lot of buyers. Buyers just continue to pick this market up. Brand new record highs in the diamonds, the SPY, and the Qs. And IWM, even the IWM, came very close to breaking through this level of resistance. Now, I don't know if we're going to make it up through there or not, but I will tell you that you don't want to stand in the way of a rally like this. I know there's a lot of folks thinking or expecting a pullback, and I am too. I think we're stretched. I think we're due for a rest or a pullback. But it's times like this when people will speculate and try to short the market, thinking they can catch the top, only to get punished, really punished to the upside. I know I used to do that. Another thing that I want to mention here is if you're not already long stocks, you know, there's a lot of good stocks out there, okay? And it's okay, you know, if you find something that has a low risk entry and you're prepared for the risk, great. Just understand that chasing into this rally at this point can probably would probably be a little bit difficult to do, because what will happen is eventually the market will pull back. And when it pulls back, even the best entry points, you'll have difficulty making money on them. It's, you know, that old saying, you know, when the tide goes out, pretty much everything goes down at the same time. You know, even the best of charts, it'll be hard for them to rally if the market's going to pull back. Now, there's nothing here suggesting a pullback right now. There's absolutely no reason to believe, if you look at price action, that there's any reason at all that this is going to stop. It's just not something to chase. Okay, so all of these are looking good, but I will say that I do think they are a little bit stretched. Now, one that's not is the Qs, and the Qs could benefit the most of a rally. You know, it's looking really, really good here, and the Qs moving on up from here doesn't look, you know, have that appearance of being so overbaked as we're seeing in like the diamonds and the SPY right now. Let's take a look at that IWM. IWM has rallied up and run into this resistance, and you can see it found a little trouble there. And that resistance, at least at this point, is trying to hold. I'm going to keep an eye on IWM just because it has lagged behind the rest of the market considerably. And if that continues to show strength, break out here, I may be a buyer in IWM, you know, buy the one that's lagging behind. If the market does rest or pull back, you know, gives me a pause so I can enter a trade. That's what I would be looking for. Let's take a quick look at the VIX, and here's a concern that I do have. When we look at the VIX, we're really back down here at these record lows. We're getting into this, and almost historic lows, where we're getting into that major complacency point. And we do have to be careful. And the only reason I'm bringing that up is I'm not expecting the market to just collapse. It's just one of those points that you should focus on or stay focused in price action, because it could occur. If it does occur, you know, you want to be prepared for it. You don't want to be lulled to sleep by a rally like this and be caught standing flat-footed if the market decides to fall, okay? And remember, we still have North Korea out there doing, you know, whatever it is that you know, goofball is going to do. It really wouldn't take much for all of a sudden a fear spike to come into the market. And from where we are right now, the fall could be a little bit damaging to a lot of folks if you chase in to this rally kind of late in the game. Let's take a quick look at something I don't look at a lot. It's called T2122. and I have it on a dark chart like this. T2122 is the 4-week new high low ratio, and you can see every time we rally up into this area, that's the bearish reversal zone. And we have a bullish reversal zone down here, obviously. Now, notice we're up here in this bearish reversal zone, but don't make the mistake of thinking this means necessarily that we have to just fall right now. Notice we can stick around up in this bearish reversal zone for a while. Okay, we don't just necessarily have to fall. So we can stay up here for a bit. We can actually stay up here a lot longer than you can hold on to a short position, I can guarantee you, if it's working against you. So don't speculate about the fall. Just be cautious, be aware that it could occur, that a pullback could happen, and it's wise to be watchful of that. Okay, not to predict it, just to be watchful. Okay. On the economic calendar, we have the CPI this morning. CPI is expected to rally a good 3% actually. CPI has kind of been lagging behind here, but the consensus is saying a 3% rise this month, and largely based on the effects of Hurricane Harvey. Hurricane Irma really hasn't been factored into that number as of now. They're also expecting another rise in jobless claims. Remember last week we had a kind of a big surprise in the jobless claims, and that was that bump up from Harvey. And they're expecting over 300,000 today in jobless claims. And also they are suggesting for the next several weeks we could see a rise in that number as the tally starts coming in from Hurricane Irma. So that will shake, or possibly could shake, the market just a little bit. Also, take note, there's a bunch of other reports and announcements here today, but nothing that would be market moving. On the earnings calendar, we have 35 companies reporting today. One of the biggest would be Oracle. Oracle's set to report today, and Oracle is not what I would consider to be a market moving earnings report, but it's rallied up strongly in anticipation of that earnings. That's helping the NASDAQ. So if we get a good report here, that could help that NASDAQ, the Qs pop out, or a bad report could certainly move or make it more challenging for the Qs to break that resistance high up there. So watch Oracle. That's about the only one on the list that's really of major importance that I see today. I could be wrong, but anytime you're holding, make sure you're checking your current account for any earnings announcements. You don't want to be caught flat-footed if a report is coming. Always have a plan around an earnings announcement. Okay, everyone. Hey, folks, if this is the very first time that you have seen this video, I do this every day as part of my market preparation. I believe in preparation, not luck. So if you find this useful, if you find this helpful, please do me a favor. Click that subscribe button on YouTube, and that follow me or button on Facebook, and also feel free to click those thumbs up buttons. I'd really appreciate that, actually. Click those thumbs up buttons and leave me a comment. Those are all great. I really do appreciate it. And I want to wish everyone an awesome day and great profits to everyone. All right. I wish you all great profits. Everyone have a great day, and I'll talk to you all soon. Take care now.